Hi friends, so in this video I am going to teach you CARO 2015, that is Companies Auditors Report Order 2015. So actually how to write CARO. Companies, open bracket, auditors, auditor, apostrophe s, report, bracket close, order, comma 2015. This is how you have to write CARO 2015. So initially, the history is CARO. Initially, they implemented as Mao CARO. Then they repeated and introduced as CARO 2003. And then in Companies Act 2013, as per section 143 subsection 11. So earlier it was 227 4A of the Companies Act 1956. Then later on, in Companies Act 2013, 143.11 talks about CARO. So central government may ask the auditor to fill up a report, and which will be reported under section 143. So in auditor's report, we will be reporting this. So as an auditor, we have to use in our audit report SCA 700. So in SCA 700, which paragraph talks about CARO? So in SCA 700, we will be having title, addressee, introductory paragraph, then management responsibility, then auditor's responsibility, then we will be having opinion paragraph. So in that legal and regulatory paragraph will be there. So in that legal and regulatory paragraph, we will be using a three-liner that we have annexed our company's audit report order 2015 to this report. So you have to know which company CARO is applicable. So CARO's applicability is very important from the student's perspective. Now this video, I aimed at to complete as soon as possible CARO 2015 and along with the 12 clauses which we are going to report. So the paragraph which we are concentrating is paragraph number 3 and 4 of the CARO 2015. Now, first of all, to see the applicability of CARO. Now, CARO 2015 is not applicable to banking, insurance, Section 8 companies. So we can remember this as BIS. That is like gold, no? Gold will be measured in BIS. That standard will be there, no? BIS. So banking, insurance, Section 8 companies, BIS. OPC and SC. That is 1% company and small company. So BIS, OPC, SC. Now, do you know like what is SC? That is a small company. Small company means a company which is having paid up capital less than or equal to, that is not exceeding, so less than or equal to 50 lakhs, and this is not or, it's and turnover less than or equal to 2 crores, that is not exceeding 2 crores. See, as of now, this is the limit. Central government, as per the definition, they have notified like today's scenario, it's like 50 lakhs, which may get extended up to 5 crores, and the turnover also, which may get extended up to 25 crores. So as of now, it's only 50 lakhs paid up capital and 2 crores turnover, which may get that 50 lakhs central government in future may extend up to 5 crores, but not beyond that as per the section. And turnover may extend up to 25 crores, but as of now, it's only 2 crores. So small company means a company which is having paid up capital less than or equal to 50 lakhs, that is not exceeding 50 lakhs, and less than or equal to 2 crores, that is not exceeding 2 crores. And any company which is a subsidiary or holding company of another company. So if you hold any other company, or if you are acting as subsidiary company for any other company, then you cannot be a small company. So small company means a company which paid up capital not exceeding 50 lakhs and the turnover not exceeding 2 crores, and which is not a holding or subsidiary company. So this is the small company. Now it's not applicable. That CARO 2015 is not applicable to banking, insurance, Section 8, OPC, SC. And for a private limited company, if it's satisfying all these three conditions, CARO is not applicable. So for a private limited company, we should see three conditions. Condition number 1, paid up capital condition. Paid up capital means equity share capital plus preference share capital. Paid up capital means equity capital plus preference capital. And paid up capital along with the reserves and surplus. Along with the reserves and surplus. See here, reserves and surplus means revenue reserve as well as capital reserve. And when you are having negative balance in the P&L, it should be adjusted only with the revenue reserve, and it should not be adjusted with the capital reserve. So even though your P&L debit balance is more than your positive revenue reserves, you should not set up the unadjusted P&L debit balance with the capital reserves. So you have to add revenue reserves, revaluation reserves, as well as capital reserve. But if you have P&L debit balance, which should be adjusted only with the revenue reserve, and it should not be adjusted with the revaluation reserve and capital reserves. So paid up capital along with the reserves and surplus up to 50 lakhs, no problem. So up to 50 lakhs, paid up capital plus reserves, up not exceeding 50 lakhs, not exceeding 50 lakhs at any point of the time. So paid up capital and reserves not exceeding 50 lakhs at any point of the time during the year. Point number 2, loans outstanding from the banks and financial institution. Loans outstanding from the banks and financial institution. Now, loans includes short-term loans, long-term loans, secured loans, unsecured loans. But loans does not include non-fund based limit. So loans includes only fund based limit and not non-fund based limit. So what is non-fund based limit? Non-fund based limit is LC, that is letter of credit, bank guarantee, etc. So unless otherwise it is invoked or devolved, that is bank guarantee devolved or letter of credit invoked, this is not included as fund based limit. So loan also only when you are taken loan from the banks, including credit card loans, term loans, cash credit loans, overdraft, etc. Then this is the second point. So outstanding loan at any point in the time not exceeding 25 lakhs. 25 lakhs. Okay. Then third point, turnover not exceeding 5 crores. Turnover not exceeding 5 crores. So what are the 3 points? If it's cumulatively satisfied, CARO will not applicable for the private limited company. Point number 1, paid up capital and reserves not exceeding 50 lakhs. Loans from the banks and financial institution not exceeding 25 lakhs. Turnover not exceeding 5 crores. If these 3 conditions cumulatively satisfied, then CARO is not applicable for a private limited company. So now turnover, in the turnover, you should exclude taxes, duties, etc., which is collected separately, because tax is not your income, tax is not your turnover, tax is the to be remitted to the government separately. So excise duty, VAT, and all should be excluded from calculating turnover. And turnover, you should adjust sales return with the turnover. Now, if you see the turnover definition of the Companies Act 2013, turnover, they use the word, it's a gross realization of goods and services. Now, aggregate gross realization for the goods and services. So the word realization, which may confuse us whether turnover is only cash turnover, because the word realization has been used. But no, we have to use harmonious interpretation, because in section 128, they use the thing like we have to use only accrual concept for bookkeeping. So turnover we can interpret as realized or to be realized. So we can enter. So even accrued turnover, that is non-cash credit turnover, which will be realized in future, will also be considered as turnover. So we have to use harmonious construction while defining turnover. So as of now, simply we can understand turnover not exceeding 5 crores means CARO is not applicable. So what are the 3 conditions cumulatively to be satisfied for a private limited company? Paid up capital and reserves not exceeding 50 lakhs, loans outstanding from the banks and financial institutions. So here we use the word banks and financial institution only. So directors loan, shareholder loan will not be considered. Financial institution includes NBFC also. And so banks and financial institution like LIC, IDFC, IDBI, then NBFCs. So these are financial institutions. So LIC, IDFC, UTI and all public financial institution. Others are called just financial institutions. So if these 3 conditions, turnover not exceeding 5 crores, if these 3 conditions are satisfied, then CARO is not applicable. Now I will go through few points, which will make you understand. Now reserves includes all reserves, but does not include depreciation reserve, because depreciation reserve is not at all a reserve, but people colloquially call them as reserves. And paid up capital includes preference capital as well as equity capital, but it does not include share application money pending allotment, because share application money pending allotment is not allotted. For a period of 60 days, they have time for using the share application money. But within 60 days, if it's not allotted, it will be treated as deposit, and it's going to violate the conditions of Companies Act 2013. So share application money pending allotment as on the date of balance sheet will not be treated as paid up capital. Then turnover means aggregate value of the realization of the amount made from sale, supply, and distribution of goods and services. Turnover includes operating income. That means if you are a trading company, even commission is forming part of the turnover. And but taxes, sales return and all to be excluded from the turnover, even though you have collected. So trading turnover includes commission turnover, but it's only operating turnover. It should not be involving any non-operating turnover. Then what is small company? Small company with a paid up capital does not exceed 50 lakh rupees. Turnover not exceeding 2 crores. And any company which is not a holding company, subsidiary company. Okay. Then Whenever a company is governed by a special act of the government, even that is not forming part of small company. Now we will go through certain questions whereby you can understand this applicability of CARO in detail. So now a situation I will give. Private limited company paid up capital 51 lakhs. Private limited company paid up capital 51 lakhs. Whether CARO is applicable or not? Yes, CARO is surely applicable because paid up capital and reserves we have 50 lakhs. So up to 50 lakhs is exempted. Beyond 50, it's going to apply. So 51 lakhs CARO is applicable. Next second situation. Private company having paid up capital 25 lakhs, reserves 50 lakhs, turnover 1 crore. I will repeat. Paid up capital 25 lakhs, reserves 50 lakhs, turnover 1 crore. Now, if you see this private limited company as a private limited company, paid up capital and reserves is touching 75 lakhs. Hence, CARO is applicable. But out of the CARO non-applicability, now tell me what are companies where CARO is not applicable? BIS, that is banking company, insurance company, section 8 company, OPC and SC. Now, this SC, what is SC? SC condition, small company condition, paid up capital not exceeding 50 lakhs. Paid up capital, paid up capital, paid up capital. So, reserves will not be included in small company. So, if you see from the private limited company definition, paid up capital and reserves 50 lakhs. But if you see from the small company definition, only paid up capital is included. So, in this case, private company having paid up capital 25 lakhs only. So, it is a small company and turnover is also, I told you, only 1 crore. So, it is not exceeding 2 crores. So, if we treat this company as a small company, CARO 2015 is not applicable to this company. So, CARO 2015 is not applicable in this case. Then we'll go to the third case. Private company, which is a subsidiary of another private company. Private company, which is a subsidiary of another private company. Paid up capital and reserves 20 lakhs, turnover 50 lakhs. Now, paid up capital and reserves 20 lakhs, turnover 50 lakhs. Now, you will see the condition of small company, but it is a subsidiary of another private limited company. So, any company which is a holding company or subsidiary company, then it will not become a small company. Hence, we have to exclude this is not comes under the small company definition. It comes only under the private limited company. So, you have to go to the private limited company. Now, you see private capital and reserves. Paid up capital and reserves is only 20 lakhs as per my example. So, paid up capital and reserves is only 20 lakhs and turnover is only 50 lakhs. Hence, in the private limited company definition, we have to see the three conditions. Private company, paid up capital and reserves 50 lakhs, turnover 5 crores, loans 25 lakhs. So, in this case, loans I have not given anything. So, you assume loans is not crossing 25 lakhs. Hence, even though the company is not a small company, we have to fit under the definition of private limited company. Under private limited company also, they are within the limits. So, CARO is not applicable even in this case. Then we are going to the fourth case. Private limited company, paid up capital 10 lakhs. Understand properly, paid up capital 10 lakhs. Capital reserve 5 lakhs. Revaluation reserve 10 lakhs. General reserve 15 lakhs. I repeat, paid up capital 10 lakhs. Capital reserve 5 lakhs. Revaluation reserve 10 lakhs. General reserve 15 lakhs. General reserve 15 lakhs. P&L surplus 9 lakhs. P&L surplus 9 lakhs. Depreciation reserve 5 lakhs. Turnover 2.1 crores. Now, if you see, paid up capital it's only 10 lakhs, but turnover it's 2.1 crores. So this company is not fitting under the definition of small company. Now we will go to the private limited company's definition. So what are the paid up capital and reserves? We have to put total. Paid up capital 10 lakhs, 10 plus 5, capital reserve 5 lakhs, revaluation reserve 10 lakhs. So 25 plus 15, 35, 39, and so 10 plus 5, 10 is the paid up capital. Capital reserve is 5, 15. Then revaluation reserve is 10, so 25. General reserve is 15, so 30, 40 lakhs. Then P&L surplus is 9 lakhs, so 49 lakhs. Depreciation reserve, I told you 5 lakhs. This should not be added to the reserves. So it's only 49 lakhs. Paid up capital and reserves only 49 lakhs. Turnover is only 2.1 crores. Hence, as a private limited company, CARO is not applicable. Then P&L, next case we will go. P&L debit balance is 50 lakhs. General reserve is 35 lakhs. P&L debit balance is 50 lakhs. General reserve is 35 lakhs. Now, capital reserve is 31 lakhs. Capital reserve is 31 lakhs. Paid up capital is 20 lakhs. P&L debit balance 50 lakhs. General reserve 35 lakhs. Capital reserve is 31 lakhs. Paid up capital is 20 lakhs. Turnover is 3 crores. Turnover is 3 crores. Now, as I told you, we have to adjust the debit balance of P&L to the revenue reserve. What is the revenue reserve or general balance? General reserves. So what is the general reserve balance? 35 lakhs. So what is the P&L debit balance? 50 lakhs. P&L debit balance 50 lakhs should be adjusted with the general reserve of 35 lakhs. So after adjusting, we will net have negative 15 lakhs balance, but which should not be adjusted with the capital reserves or paid up capital. It should be separately assigned. So we don't have any revenue reserve as of now. So this P&L debit balance of 15 lakhs, don't consider it. Now go to the positive balance of CR, that is capital reserve 31 lakhs, paid up capital 20 lakhs. So reserves, now it's like reserves and paid up capital is going to 51 lakhs. Hence, as a private limited company, it's touching. Since turnover is 3 crores, we cannot fit into the definition of small company. So paid up capital and turnover, you have to see the small company. Turnover is here 3 crores, hence it is not a small company also. And we have to see from the private limited company angle, paid up capital and reserve. That is, paid up capital is 20 lakhs and capital reserve is 31 lakhs. Hence it's coming to 51 lakhs. Hence CARO is applicable. CARO 2015 is applicable. Then we are going to the next scenario. Private limited company, which is a subsidiary of public company. Private limited company is a subsidiary of public company. Paid up capital 25 lakhs. Paid up capital 25 lakhs. No reserves. Turnover 20 lakhs. Paid up capital is 25 lakhs. Turnover is 20 lakhs. You will just go to small company definition. See, from the small company definition angle, it never told public company cannot be small company. It told any company. So from that angle, if you treat as small company, then CARO is not applicable. But if you see from the private limited company angle, private limited company is a subsidiary of public limited company. So private limited company, when it's become a subsidiary of public company, so it becomes public company. So if you see from that angle, it's a public company, hence CARO is applicable. But if you put in a small company definition, even though it's a public company, it's coming out a small company definition, hence CARO is not applicable. So we can use in that angle. Then private limited company, next scenario, private limited company, which is associate of public company, paid up capital 25 lakhs, reserves, no reserves, turnover 20 lakhs, paid up capital 25 lakhs, turnover 20 lakhs. Now it's associate company. Now associate is not a subsidiary, even though in section 129 subsidiary includes associate. The word used is subsidiary include associate, and section 129 of the Companies Act 2013. But for this purpose, subsidiary does not include associates, because associate is different definition. You have significant influence, 20%, etc. Subsidiary has a different definition. So under this question, subsidiary does not include associates. Hence, even though this company is a subsidiary of a public company, even though it's only an associate of a public company, it's not considered as a subsidiary. Hence, we have to see this company as a normal company. So it's not a public company. Now, if you see from that angle, paid up capital is 25 lakhs, turnover is 20 lakhs. You can put this as a small company definition. Hence, CARO is not applicable. Now, we will go to the next scenario. Company has 3 branches. One branch is in Delhi, one branch is in Lucknow, another branch is in Chennai. So one branch is in Delhi, the turnover is 2 crores. Another branch in Lucknow, the turnover is 3 crores. Another branch in Chennai, the turnover is 2 crores. Delhi branch 2 crores, Lucknow branch 3 crores, Chennai branch 2 crores. So put together, it has 7 crores. And all these branches are audited by different auditors. And you are the principal auditor sitting in the head office. You have not audited any branch office. Now imagine this scenario, whether CARO is applicable to all the branches. See, if you see from branch scenario, each and every branch is less than 5 crores definition. So you may think CARO is not applicable, but actually speaking, CARO is applicable, because company is put together, you have to report CARO. No? So for all the branches, CARO is applicable. So even though the branch is only 2 crore, 3 crore, etc., you have to, and the branch auditor have to report CARO. And as a principal auditor, you have to use SCA 600. And when you are consolidating that report, you have to give equal weightage for the component auditors report. So branch auditors are component auditors, so you have to go through. But ultimate responsibility is the head office auditor. Next, so CARO is applicable because the company put together it's exempt, so it's coming more than 5 crores turnover. Hence, CARO is applicable, and each and every branch auditor has to report CARO. Then next scenario, opening balance of paid up capital. Opening balance of paid up capital is 55 lakhs. Closing balance of paid up capital is 45 lakhs. So opening balance is 55 lakhs. Closing balance is 45 lakhs. So you may think the paid up capital is under the limit of 50 lakhs. Why 55 lakhs become 45 lakhs? Company could have bought back certain shares. Okay. So if they bought back, see, I don't use the section 68 of the Companies Act 2013 for this example. I just put some example like 55 becomes 45. So that limit of 10%, 25% I have not included here. So just for example's sake. So the reserves becomes 2 lakhs. and turnover is only 1 crore. Opening balance is 55 lakhs of capital, closing balance is 45 lakhs, and reserve is 2 lakhs as the end, and turnover is only 1 crore. Now, whether CARO is applicable, you have to see from the angle of paid up capital, but the used word is anytime during the year. So, anytime during the year means opening and closing or anytime. Now, opening capital is 55 lakhs, hence CARO is applicable because paid up capital with reserves, they told. So, paid up capital of 55 lakhs and opening reserves not given in the question, but even though paid up capital itself is crossed 50 lakhs, hence CARO is applicable. So, even though closing balance is only 45 lakhs of paid up capital, but opening balance is having 55 lakhs, hence CARO is applicable. So, it says anytime during the year. Next scenario, we'll go private limited company with cash credit loan of rupees 15 lakhs, term loan 10 lakhs, and letter of credit 5 lakhs. Cash credit loan 15 lakhs, term loan 10 lakhs, letter of credit 5 lakhs. So we should not include letter of credit as I told you because it is a non-fund based limit. So we have to include only fund based limit. So CC loan with term loan is equal to 15 plus 10 is equal to 25 lakhs. As I told you, not exceeding 25 lakhs. So 25 lakhs, up to 25 lakhs, CARO is not available. So it's only 25 lakhs unless otherwise other conditions are not satisfying. Only this, so we can assume that paid up capital and reserve is less than 50 lakhs and turnover is less than it's not exceeding 5 crores. Paid up capital and reserve not exceeding 50 lakhs. Hence, if this condition alone which we looked into, that is a loan condition alone, so the loan is only 25 lakhs, hence CARO is not applicable. Next condition, private companies cash credit year-end balance is only 20 lakhs. But at one point during the year, we had 29 lakhs outstanding, so only one day. But even the next day itself, it's less than 25 lakhs. But even one day, if it's crossed, CARO is applicable. So in this case, only one day it has crossed 25 lakhs. At any point during there, that's the word used in the CARO. So CARO is applicable. Next, private company has corporate credit card outstanding balance of 2 lakhs and CC loan of 24 lakhs. Corporate credit card, nowadays the banks are giving corporate credit card and so it should be added to the loan balance. Next scenario, private company gets loan from SBI 20 lakhs and two NBFC 6 lakhs and two directors 2 lakhs. Private company getting loan from SBI 20 lakhs, two NBFCs 6 lakhs, two directors 2 lakhs. Now, NBFC will also be included in the definition of financial institution. Hence, this NBFC will be added to the SBI's loan. Hence, CARO is applicable. It's crossing 25 lakhs. Next, private company sold 5.5 crores worth of goods. This 5.5 crores worth of goods includes excise duty of 25 lakhs, VAT of 30 lakhs. So as I told you, excise duty and VAT will not be considered. So it should be taken away. So excise and duty and VAT, excise duty is 25 lakhs and VAT is 30 lakhs. Put together 55 lakhs. If you take out 5.5 crores minus 55 lakhs, it's coming less than 5 crores. Hence, CARO is not applicable. Next scenario, trading company having sales of 4 crores, commission received 1 crore, dividend received 10 lakhs, interest received 5 lakhs. Trading company sales 4 crores, commission received 1 crore, dividend received 10 lakhs, and the interest earned is 5 lakhs. See, I told you trading company we have to add operating income like including commission received, but it does not include dividend income because it's a finance income. It's not operating. It's other operating income or non-operating income, and interest is also non-operating income. So 5 crores. Trading company is having 5 crores turnover, but it's not exceeding 5 crores. Hence, CARO is not applicable. Now, how to report CARO? It will be reported in the report on legal and other regulatory matters. Report on legal and other regulatory matters. And how to report as per means as required by Companies Audit Report Order 2015. Companies bracket Auditors Report Order 2015. That is bracket close and after the report issued by central government in terms of section 143 subsection 11 of the Companies Act 2013. We give in annexure a statement of matters specified in paragraph number 3 and paragraph number 4 of the order to the extent applicable. So whenever CARO is applicable, that point you have to write. So even in one scenario, if one point is not applicable, then you can skip that point. You can say this point under CARO is not applicable, like that you can write. Then whether CARO is applicable for foreign company? Yes, absolutely. CARO is not. CARO is applicable even to the foreign company. Now I will go to what are the clauses are there in the CARO. Now you can write a small mnemonic, I can say fill FIL, fill FIL, ID card, ID, C for card, FIL, ID, card. So FIL, fill, ID, card, C for card. That's all. Card. Card is only one word. Card. C. So fill is 3 standing. ID is having 2 standing. Card is having 1 standing. Only for C. SAD. 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 Then girlfriend. GF. Girlfriend. So and imagine you are having 2 girlfriend. So we are filling ID card of 2 girlfriend. So fill ID card SAD girlfriend GF, but in between the GF we have to introduce one T for 2. Okay, so FIL ID card SAD girlfriend GTF, that is girl 2 friend. Okay, now why I am telling this, because it is easy way of remembering CARO process. Fill F stands for fixed asset. Under fixed asset, what you have to write? You have to write fixed asset, whether the records of fixed assets is proper, whether physical verification of fixed assets is proper, whether any discrepancy has been noted. What are the 3 points to be reported? Records, physical verification, discrepancies. Then fill FI, inventories. Inventories we have to report 4 things. Verification is proper, adequacy of procedure is good, records is maintained properly, discrepancies has been properly adjusted. Verification, adequacy of procedures, records, discrepancies. Then L. L means loans. Loans granted to parties covered under section 189. So related party loans, in that you have to report 2 things, whether principal and interest are regular in getting. So the company which has given loans, whether the principal and interest are properly recovered, and whether any reasonable steps has been taken for the loan or interest which is outstanding and arrears is more than 1 lakh. So this is the 2 points to be reported. So whether interest and principal is proper and whether any arrears is more than 1 lakh. Then internal control system. Internal control, the 4th point, fill over. FIL is over. Now ID is there. Now I. So I is internal control system. Internal control system for inventories, fixed assets, sale of goods and services. So these 3 points. Come on. Inventory, fixed assets, sale of goods and services. So in these 3, internal control system, whether it is proper, and if the company has noticed any failure in correcting the weakness and which is continuing weakness. So company which is which has identified weakness and it is continuing is D, that is deposits. Under deposits, RBI rules, whether it is applicable for the company's deposits, but that is very important. Whether RBI rules is applicable for deposits. If yes, whether the company has followed that RBI rules. Then point number 2, whether CLB has given any order for the deposit accepted, whether the company has followed that order. So CLB's order for accepting deposit and RBI rules has been complied with. So fill ID is over. Now card. Card means C. So cost records. Whether company has been recommended by the central government to maintain cost records. See, cost records under section 148, we have to see where cost audit, they have told which company has to maintain cost records. There we find 2 companies. One is regulated sector, another one is non-regulated sectors. So you have to go to those regulated and non-regulated sectors. For regulated sectors, the limit is 25 crores, whether the turnover is crossing 25 crores, and for the non-regulated sector, it's 35 crores. So if you are under 25 crores and 35 crores in respective sector, then cost records is applicable. So as an auditor, you have to see whether the cost records is applicable for the company, because it's prescribed by the central government under 148, and cost record rules 2011 also we have to see. So if central government has prescribed the cost record to this company, we have to see whether the company has maintained the cost records. It's not required for you to just to review the cost record. You should just say whether they have maintained the cost records. Then next point, statutory dues point. In statutory dues, you have to report 3 things: undisputed statutory dues, disputed statutory dues, and IEPF, that is Investor Education Protection Fund. In undisputed statutory dues, you have to tell 4 things: whether PF, ESI, IT, VAT, service tax, excise duty, customs duty, that is Provident Fund, ESI, IT, that is income tax, VAT, service tax, excise duty, custom duties, whether they are regular in repayment, whether they are regular in payment, and whether any outstanding and the outstanding is more than 6 months. So you have to report under undisputed cash reduce. Under disputed cash reduce, you have to see what is the amount of disputed cash reduce, under which forum it is pending. Amount of cash reduce, disputed cash reduce, and which forum, whether it is an appellate tribunal or whether it's there in a sing of court or anything, and which court, etc. Then third point is IEPF, Universal Education Protection Fund. Any amount which is to be transferred to Universal Education Protection Fund, whether it is transferred or not. So till ID card is over, SAD yes also over. That is statutory dues. SAD yes over. A, accumulated loss point. Now this point is applicable only when the company completed 5 years of age. So after incorporation 5 years is over, then only this point is applicable. Then you have to see whether accumulated loss exceeds 50% of the net worth of the company. So 50% of the net worth of the company. Then you have to see what is whether the company has incurred cash loss in the current year, as well as whether the company has incurred cash loss in the previous year. So you have to report whether the accumulated loss exceeds the net worth. So whether the net worth has got eroded, and the cash loss in the current year and the cash loss in the previous year. These three things you should report. Then SAD, D for default to the banks. Whether the company has taken any loans from the banks, financial institutions, and debentures. Banks, financial institution, debentures. Is any default? If yes, what is the period of default and what is the amount of default? Then D is over. Girlfriend, GTF. I don't know, girl to friend. G, guarantee. So whether the company has given guarantee for the loan taken by others, whether it is prejudicial to the interest. The terms of guarantee, whether it is prejudicial, that is G. Then T, term loan. Term loan, whether it is applied for the purpose which is obtained. So the auditor has to write whether the term loan has been applied for the purpose which is obtained. Then F, last point is F, fraud. In fraud, whether it is noticed or reported. Just noticed, yes, just noticed. Reported means it's been reported to the officials. So noticed or reported by the company, that is, company has done the fraud, or on the company. So fraud, as an auditor, when you find fraud, and you have to write whether the fraud is noticed or reported by the company or on the company. If yes, what is the nature and what is the amount? With this, CARO 2015 is over. So all the best. I have completed in nutshell as fast as I can. So please follow me. I am CA AKS Krishnan. You can just YouTube CA AKS Krishnan videos. You can find many videos. Thank you so much. All the very best.